Welcome back to our post-budget analysis. Mohammed, let's chat about this public sector wage bill. All eyes on the wage bill to see whether we would see more clarity going forward. Are we going to see inflation-related increases? Are we going to see reductions to increases on that front? Enough clarity for you or not?
Yeah, definitely not at this stage. I mean, we'd have to go and actually drill through into the numbers and have a look in terms of whether any clarity materializes from that. That being said, I mean, it is really something that the market is looking at quite critically at this point in time. The criticism has been that public sector wage bill has been growing at a phenomenal rate relative to what it should be, and that we haven't been putting enough money into actual capacity building, into infrastructure, as we've mentioned, which is a very strong theme. That being said, all indications at this point in time, I think the number that he put into the speech was social spend makes up around 58% of the budget. That's still a huge number. And again, I don't think the market's going to take much heart from that at this stage, certainly.
Also, another comment, a pre-budget comment, was that we need professionalism in the public sector. I think everyone agrees with that.
Yeah, Bronwyn, I think that's absolutely right. Yeah, we need to peg back the poor spending that's taking place. The unauthorised expenditure, the wasteful expenditure, and that all boils down to the professionalism. It's about about public servants doing what they're supposed to be doing, yeah, it's critical to move ahead and improve service delivery.
Annabel, we've had heated debates about this in the past, and certainly it's something that you've been looking for. Of course, the Minister coming down hard verbally on corruption, but again, it's verbal.
Look, I think, just even to touch on the wage bill we were talking about just now, it's not so much just also the expansion of the number of public sectors, but actually the proliferation and rapid increase in salary and wages, even at the top end in civil servants. And that's a worry because, we're getting to a situation where some civil servants are earning more than in the private sector. Obviously, that's a path that Greece tread and, and obviously saw a significant increase in the number of civil servants and the levels of remuneration at twice that of the private sector. So these are big worries for us. In terms of corruption, obviously, it is significant wastages and inefficiencies which are actually taking money out of the mouths of the poor. And this is really the bottom line, because money that is stolen, money that is wasted, money that is spent inefficiently, money that is not spent on infrastructure actually reduces the output growth potential of the South African economy. It doesn't actually reduce unemployment levels clearly, and the real worry is that we're moving along. We've more 15 years since the ANC took over, and there still is this big structural unemployment problem of 25% unemployment rate in South Africa. Obviously it moves towards 40% if you use the expanded definition.
I mean, the bottom line is that it's unacceptable. We go back to that 260 billion rand, yes, only spending 178, yes, which is 68% of that.
We need to double GDP. You need to double the actual rand value of GDP to get this unemployment rate down to single digits, which is where the longer term international norm is. And the real worry is that if we don't double that GDP, we need to do it through the private sector expansion, and we need to do it through infrastructure growth. And if we don't actually see that doubling, we're not going to work down this unemployment rate.
Some will be very happy that we see more tax relief for small businesses out there, of course, seen as the growth engine for the South African economy going forward.
I think that's absolutely right. I mean, some people might criticise it and say there could have been more relief. Because if you look at what the relief is in terms of rand terms, well, it's a little bit of relief for small business corporations in terms of tax rates. The primary relief, though, is in terms of a tax administration for micro businesses, and moving from 18 returns and payments a year down to 2. I mean, that will reduce.
We've been crying out for that on the small business front. Reduction in red tape.
Yeah, no, they need it desperately, and thankfully it's coming now. But I mean, yeah. But perhaps more relief in terms of taxes itself would have been welcomed. But on the whole, I don't think we can argue too much.
But at least a reduction in red tape, moving in the right direction.
Yeah, absolutely. I mean, small business is always the largest contributor to employment. Employment being the key theme. We need to turn this employment picture around before we start seeing the whole social dynamics start to actually stabilize. So again, reducing the red tape, an absolute positive there. Whether small business actually perceives this as a real reduction in red tape, whether it actually does become easier to do business, that is obviously proofs in the pudding, but certainly a step in the right direction from that perspective.
Job creation, what did we hear on that front? No reiteration of that 5 million jobs by 2020. Is that now under the carpet? Annabel?
Well, there was 6.2 billion additional for job creation. I think some of the key issues are that if we manage to bring our 25% unemployment rate down to single digits, we're going to have significantly lower pressure on government in terms of social services, social welfare. The education component is the biggest spend item in the budget, but the social services, close to 60%, that's a very heavy drag on government spending. So as soon as you reduce the unemployment rate, you free up money elsewhere, because you reduce the social service drag on the economy, the payment drag in terms of government finances, so you actually free up money to be spent elsewhere in the economy if you can actually get your infrastructure build going. So these are some of the concerns that government needs to actually work on, is the implementation now. The policies are good, the plans are good, we have the finances, it's just the actual implementation that needs to become the focus, I believe, for 2012.
With a 2.7% growth rate for 2012, 2013, we're looking at 200,000 jobs being created over that period. Do you think that's realistic with that growth rate?
Potentially. Again, is it anywhere close to what we should be beginning to bring that employment down? That's a completely different question. We need to be growing at double these rates just in order to make a proper dent in terms of the unemployment. How feasible is that? I think that's the more important question. I think we're a long way away from that. Structurally, we need to actually orientate our economy towards getting more jobs in the system. And on the backdrop of a fairly tenuous global economic picture, it's not going to be an easy task.
Annabel, you want to add?
Yeah, I think we need to have significant increase in private sector involvement in this infrastructure delivery, not just awarding the projects to the private sector and getting them to actually run through with them, but actually getting the private sector involved as well. If government lacks capacity to award the tenders or to supervise and to get it done, then get the private sector involved to actually do that. The real worry is that government sits on its hands because it doesn't have the capacity, and we don't get this infrastructure drive.
The DAIC suggesting partial privatisation of state-owned enterprises.
But that's a funding
No
issue. We
mention on that
don't need
front.
the funding. It's not the funding that we actually need. What we need is the implementation.
We need more PPPs, so to speak. We'll pick up on that after the break. We're heading into that short break. We'll be back shortly and continue with our post-budget 2012 analysis.